Welcome back, everybody, to another episode of Fintech Fridays. We are mixing it up. We are probably going to talk a little bit of tech and fintech, but we're going to mix it up a little bit. We are joined today by Laura Witte. Laura is part of the Truth in Lending team at Highland Mortgage, and we're super excited to have Highland Mortgage as a new FinLocker client, and really excited to have Laura on the podcast today. Hey, Laura.
Hey, thank you for having me. I appreciate it.
So you had noted that you are one of our first non-technology, in air quotes, because we're all in technology these days, but
Yes, exactly.
one of our first non-tech focused guests, and you are correct. We are starting to expand the conversations beyond technology, not because technology is not important and not fun to talk about, but our audience is really growing with loan officers. And I thought it would be awesome to have some practitioners kind of come on and share expertise. And so we're going to do that a little bit today, Laura.
Okay, great. I'm happy to help and happy to share.
So I'd like to start with your brand, Truth in Lending.
Correct.
There's a lot there. Can you share with us kind of how that started, and then how you live up to that today?
Yes. So quick explanation here. 25 years ago, I went to get a mortgage, and I was just kind of treated poorly by the bank, treated as a number, and I thought I was in the middle of changing careers. I thought I could do this. So I started to work for a broker. This was back in the Wild West days, before TRID, before all these things. And I saw a lot of things that were misleading to clients, and people with higher credit scores with lower credit scores getting, just taken advantage of, where I would hear people boasting at some of these events. Oh, I got 8 points on this person. I got 7 points. And I thought, this is horrible. These people, the people that really need help. So I moved on to another broker. They closed because one of the loan officers committed fraud. And this was pre-2008. And I thought, I really need to be somewhere where I can control my destiny and the type of business I believe in, and the culture that I believe in. And I started to build my business on, I'm going to give you, the truth. I'm going to be upfront, all of that transparency stuff that a lot of it came after TRID for a lot of these loan officers that are no longer here. But so I had about 2 weeks after that company shut down to start my company and move my pipeline. And I thought, okay, I need a name. And I was looking at a truth in lending disclosure, and I thought, oh, truth and lending. And I actually had to call the Department of Banking and Finance and get a special approval because it sounded so similar to truth in lending. But that's where it came out of. Is just I feel like an advocate for my clients. I feel very protective of people. So it really is. That's where the name was born.
I love it. And it's, it's even more important today, I think, right? The Truth in Lending moniker, especially with kind of the proliferation of social media. We see a lot of loan officers taking to the social media platforms, which I think is awesome. But it's a little dangerous sometimes too, with some of the messaging out there. So you all partnered up with Highland Mortgage recently, and as I mentioned in the opening, we're super excited at FinLocker to have Highland Mortgage join us as a client. You guys did a great job branding your version of FinLocker. Tell us a little bit about the process.
Yeah, thank you. Yes. So we are the Truth in Lending team with Highland Mortgage. And Highland Mortgage, all of us believe in the transparency and the advocating for our clients and our buyers, our agents, in this time with everything going on with, the settlement, all that stuff. So as far as the branding, I'll have to say that's a good conversation for for Mark at 1 o'clock. Mark Witte is my husband, and we work together as a team. And he does our marketing, and he created the Ready Set Home, which I think is really important because one of the biggest reasons one of the biggest reasons that I became referral only business 20 plus years ago is because the people that had bad credit, or the people that didn't have like a direction and were just being told, you're not approved, I'm sorry, they had no plan. And I think that the Ready Set Home is great for buyers that maybe have those issues where they're not sure if they qualify. They're monitoring their debt to see when they qualify. It's also good for everyone, for A+ buyers too. And especially going into the millennial purchasing, markets too, to have that app. But it's been fantastic. Really, we've really enjoyed working with you and your product.
Yeah, we're super excited. We love when a client gets really creative around the product name, because that tells us a lot about how you all think about consumer outreach and engagement. So you hit on something there. I want to kind of poke a little bit at, your pipeline, and what it might look like on average, maybe compared to some other referral-based loan officers. I suspect, and I don't know this because we didn't do a pre-call here, but I suspect that you probably carry more people in your active pipeline that are in some state of getting prepared or overcoming challenges than the average loan officer. Is that a fair assessment?
Yes. And I think I always have. There's so many different levels that I've saw the need for that because those people were just being ignored and kind of thrown away. And back in the day, I would tell my loan officers, there are no throwaway people. Do not throw leads away. Everybody deserves a home. We came from a family where we lost our home in foreclosure when I was young. So that is really important to me. So that's my why. That's what's important to me, to help people. At the same time, what ended up happening was the creation of a diversification of my pipeline. For example, I have people that are ready to buy now. I have people that are 6 months out, or 90 days out, 6 months out, 1 year out, 2 years out. These are people that are working on becoming homeowners in different timelines, which creates different pipelines. So I have an abundance of people coming and going, in and out of the pipeline.
I mean, it's for first of all, I love that you have a why, and a very vivid and experiential why. That's like, a lot of people don't have that. And as negative as that probably was, and impactful as it was as you were younger, it's probably lives with you every day with every customer. And so that's an inspirational aspect of what you do. But then there's the good business, right? There's I talk to loan officers every day and still am amazed at how many loan officers wait for someone to raise their hand and say, I'm ready, versus being willing to kind of roll up the sleeves and stay with somebody for 6, 12, 18 months or longer and really help them get to a place of readiness. I can't think of a more gratifying result than to help somebody that probably didn't see an opportunity to buy a home, and because of working with you are literally realizing the American dream.
Yeah, thank you. That means a lot to me. That's really, it's important, besides being good for business and, our pipeline, our production. It's good for the soul, and it comes across to clients. I had a client say, I could really tell you care. And I love when people tell me, I don't think I can qualify. I'm like, really?
Yeah.
Let's talk about that.
I love that.
And it builds loyalty and trust. And those people that may not qualify right now, eventually they will. And it's a plan. And I tell someone, if they're not approved and I look at their credit, I always say, you're pre-approved, just not right now. Let's talk about what you need to do to be pre-approved in the future. And let's, work backwards on what that looks like. And I've done that with so many people, and it works. Does it work for everyone? No, of course not. Nothing works all the time
Yeah.
for everyone, but it works a great amount of time. And you wouldn't, you'd be surprised at all the referrals that come off of that, because people just are like, wow, this woman cares. She could be working on someone else's loan. I even have people that apologize. I'm so sorry, my credit's so bad. I'm so sorry. I'm only buying a $200,000 house. I don't discriminate on loan amounts. I know there may be loan officers that are like, oh, I'm not going to do that. It's too low. I take 200 to 2 million. It doesn't matter
Right.
to me. It's all what's important to the person in front of you, and honoring and respecting the person in front of you.
Yeah, I love that. You said something that I think is obvious, but maybe not so obvious for the average LO, is the referrals that you get off of literally changing people's trajectory in their financial life. I mean, it's a massive, massive positive impact that you have on families. And of course they're going to tell people about you and your team, right?
Yeah. Yeah, absolutely.
So how I really like to like drill into some of the mechanics of, carrying a pipeline of folks that are in, a various stage of getting ready, to me requires a lot of discipline and a lot of focus on how often you're having real interaction, right? I'm sure you have the CRM is all dialed in, and there's a regular cadence for those types of communications. But I also suspect that you probably go a level deeper and literally are having, regular impactful conversations with these folks at various stages of their journey. Can you just talk a little bit about that for us?
Sure. Yeah, I've always, when I say never throw a lead away, I put them on reminders. So we definitely need automation for our job. There's just too much going on, too much to do. So depending on the person, if they're like 6 months out, I'll put a reminder where it pops up and says, call this person, check in. I have very good notes. It's extremely important to take good notes, and also very personal notes, like, hey, they just had a child. They just, someone graduated from college. And then when you talk to them, you say, how's the baby? Like, they are like, wow, you remembered that. That's important
Yeah.
for many reasons. So I stagger, the leads out depending on when they need to be called, and the conversations that I need to have as reminders that pop up. Every Friday, I have my touching base email with whoever, like I can send 100 emails out on Friday, and a lot of those are personal touches. And then for the people that are qualified, looking for a home, I have my Friday email. And then on Monday, I touch base and say, how did it go? You should always keep in touch with those people, because I've lost a loan or two over the weekend
Yeah.
from, like people going under contract and shopping. But I do have different days set up for different things where I have time blocking. It's so important to have that time blocking where you can be mentally focused on what you're doing for that hour, 2 hours, 3 hours. And I have bad ADHD, like a lot, like a lot of loan officers. So it's important for me to have those time blocks where I know I'm going to, for 2 hours, I'm just going to email. I'm not going to answer the phone. I'm not going to do that. I'm just going to email or text. There's tons of people that just like to text,
Yeah.
and touch base with those clients.
Love that. So we're recording this on Monday, August 5th. And I'm sharing the dates. I normally don't do that because this podcast will sit in the queue forever, but I think it's important. We're recording this on Monday, August the 5th. It's going to publish following Friday, so in the same week.
Right.
We're coming off a pretty wild weekend in the global
Mm-hmm.
markets. Our US markets this morning are a little hairy. And as a result, we're seeing, what looks like really bad news in the broader economics, which we know in the mortgage space, economic bad news a lot of times converts into improving rates or potentially even good news on the mortgage side. How do you take these market nuances and educate your pipeline of prospective clients, but also your past clients who may benefit by, being in a position potentially to refinance? Like, what's your strategy around
Yeah.
educating on the markets?
Yeah. So there's many different ways to do that. Where we'll do video, we'll send emails to the database, um, all different things, text messages, phone calls. But the thing is to be prepared. Like we knew this was coming. So we have folders of refinances of all the clients that we closed for the last, few years. I have a pipeline of my database, you know, who has what rate, and we have a plan that we're doing with certain types of loans, with certain rates that we're implementing for the refinance market that's coming. But we saw this coming, so we did a lot of preparation during times that were considered slow. I mean, in
Right.
January, February, March. I mean, we've been doing stuff to get prepared. I would tell people that haven't yet done that to pull their pipeline and start touching base with every single client and whatever that looks like. I mean, I have thousands of people in my database over the years, but I've taken about 600 that I'm probably going to personally reach out to a little bit every day. I'm going to send an
Yeah.
email, of course, and use like Top of Mind or Surefire to do that. But also, there's nothing like personally reaching out to people and just shooting an email. And usually, what gets through um, the spam folder is a subject called touching base. I just say touching base. That's always worked.
Yeah.
I've always been able to get responses. People love automation, but they want a personal touch, with it. So if they see that you're like sending a letter where it says, "Hey, hope all is well. How's your, so and so, how are you doing? How's the new job?" I think that
Yeah.
it's more of a personal touch. Does it take a little longer? Sure, it does. It's so much easier to just kind of depend on automation, but together it's much more successful to have personal touch and automation.
Sure.
If that makes sense. Hopefully that makes sense.
Yeah. I think that's it. Never, I mean, the timing of it totally makes sense. And I think we're in this challenged market where people have all these different distractions, and email is tougher today than it's ever been.
Yeah.
So I think it's having those good subject lines, and then having it feel like it's a personal message is definitely going to be better received by the
Yeah,
recipient.
exactly. Like I've heard from, from some agents. We do a newsletter every week. Lots of people do newsletters. Lots of people have the same newsletter that they send out every week. So we do something different every week, and the subject is like in your face. There was one time when the rates were going up where I was like, the rates are as high as Snoop Dogg and Martha. I mean, it gets people's attention. And then it also is
Right.
like, you're not going to read this from another loan officer. And I've had so many people, so many agents tell me I'm the only newsletter that they read. And then of course we have, market data, we have what's going on in our local markets, but you got to get people's attention. Um,
Yeah.
you know, yeah.
I love that. And
Yeah.
I'm
And
going to
as far
probably,
as,
I'll probably
yeah.
steal that line too.
And as far as, reaching out to clients, I mean, there's a few things going on. You're going to have a pipeline, your current pipeline, people are going to want to relock, float down. You're going to have to address that. You're going to have to address people you just closed, a month ago, the rates were different. So you're going to have to make sure that you get in front of those people, because you don't want them refinancing with someone else or whoever is currently servicing, if you don't service your mortgages, and then you have an early pay off and have to pay your commission back. I mean, yeah.
Yeah.
So it's really time for people to just dig in and get some work done on their database and really focus on, if I was teaching loan officers, the most important thing right now in this market is to get control of your database and get in front of people whatever way you can, and
Yep.
and do it several different ways.
I think that's probably a great point. Is it's not just one way.
Right.
It's as many ways as possible, because everybody's different. I don't know about you, but I get inundated with
Mm-hmm.
emails, and I'll still respond and get to them. But for me, text is like, I prioritize text when they come into
Yes.
my phone over emails. So you
Yeah.
just got to
Yes.
learn what people, learn what each person is really going to respond to.
Yeah, absolutely. I get more texts, and I also respond quicker by text, and I get probably a couple hundred texts a day
And
from
something else,
clients.
something new is going to be coming down the pipe. Whatever the new communication method will
Mhm.
be, we'll all have to adapt to that. Uh, Laura,
Yeah.
this has been super helpful. I know I learned a couple things there in addition to a great subject line referencing Snoop Dogg, which I'm definitely going to use.
Like the point of the matter is just stand out. You don't want to be lost in the crowd, and you know, like I said, automation's fantastic. We cannot do our business without it. It's crucial to have people, have something like the Ready Set Home where they can monitor things and come back to you and say, look what I did. I'm so proud. I paid off my debt. I'm ready to buy a home. But and emails and texts and Facebook and all this stuff. But nothing beats just calling somebody and
Yep.
taking that time and doing time chunks every day and saying, hey, you're important to me. And sometimes less is more. It's just not so much reaching out, but maybe just a call, is kind of old school, but I I closed almost 100 million last year and I'm on track to do it again. So I might know something a little bit.
Yeah, I think old school is the new school.
Exactly. Yeah. So
Laura, thank you so much for spending some time with me today.
thank you.
Thank you, everybody. Come back in 2 weeks for our next episode of FinTech Fridays.